Crypto gaming. Is it still the next big thing, or has the hype maybe kind of stalled out? You might be seeing headlines suggesting a slowdown, maybe some trouble.
Right.
But today, we're not just, scratching the surface. We're doing a deep dive. We want to answer that core question. Is crypto gaming actually dying?
Exactly. And we've got the perfect source for this DappRadar's latest April Games report. We're going to really unpack the insights from their analyst, Sarah Gergelis.
Okay.
Our mission today, well, it's pretty straightforward. Understand this recent dip in activity and interest and figure out what it really signals for the future of the whole ecosystem.
And we'll be looking at things like user activity, funding, how the games themselves are changing.
Yep, exactly. Who's playing, where the money's going, and how the actual game models are evolving. All based on that DappRadar data.
Okay, let's get straight to it then. This dip in April, it sounds like the main headline grabber. What exactly did the report find?
Well, the big number is a 10% decrease in daily unique active wallets. That happened in April.
10%?
Yeah, and it hit a 2025 low of about 4.8 million daily wallets.
Ah.
And there's more. We're also seeing gaming's kind of dominance over the whole decentralized app industry shrink a bit. It's now tied with DeFi.
Tied with DeFi. How much is that?
Both holding about 21% of the market share within the dApp space. So gaming's not the undisputed leader. It maybe was for a while.
Okay, so yeah, on the surface, that definitely looks like, fewer people playing, maybe less overall importance in the grand scheme of dApps.
It would look that way, yes.
But Sarah Gergelis, the analyst you mentioned, she suggests this isn't necessarily the whole story, not a death knell.
Precisely. Her quote on this is, I think, really insightful. She says, the blockchain gaming industry isn't dead. It's evolving. It's moving from noise to signal.
Moving from noise to signal. Okay, I like that phrase. Let's break that down. What's the noise she's referring to? What was that like?
The noise, well, that largely points to all the intense speculation we saw, mostly driven by those early play-to-earn mechanics.
Right, the P2E hype.
Exactly. And a lot of those early games, the main draw for many players wasn't necessarily like how fun the game was. It was the potential to earn tokens, the financial side. And that created a ton of hype, a huge rush of users. But many were there mostly for the money, not the gameplay.
Okay, yeah, where the earning potential kind of overshadowed everything else. So if that's the noise, what's this signal that's supposedly getting stronger now?
The signal is this shift towards genuine engagement with the games themselves, real interest.
Okay.
So we're seeing much more emphasis now on the actual quality of the gameplay, on true ownership of in-game assets, ownership that has value beyond just speculation, and also on building strong communities around the games.
So people playing because they actually like the game.
Basically, yeah. The idea is players are now being drawn in by games that are actually fun, engaging, and the blockchain part adds real value to that experience, rather than just being a way to cash out.
That makes a lot of sense, actually. If the focus shifts to making, genuinely good games that people want to play, then maybe fewer purely speculative players isn't such a bad thing for the long run. It could be healthier.
Exactly. It points towards more sustainability.
Okay, now let's pivot a bit. What about the money side? The report also flagged a pretty big drop in investment, didn't it?
Yes, it did. April saw a really significant drop, 69% in investment activity compared to just the month before March.
69%. Wow.
Yeah. Total funding landed at around $21 million for the month. That's a considerable pullback in capital flowing into crypto gaming.
Okay, so what's driving that? Are investors suddenly getting cold feet about crypto gaming's future?
Gergelis points to a couple of main things happening. Firstly, there's just a broader trend right now where investor attention and user attention, too, is kind of shifting.
Shifting where?
Towards other hot areas like real-world asset tokenization, RWA, and obviously the huge buzz around artificial intelligence. Those areas are just capturing a lot of excitement and capital.
Right. AI is everywhere.
And secondly, you can't ignore the general macroeconomic uncertainty. That plays a big role.
How so?
Well, when the economy feels shaky, investors tend to get more cautious, more risk-averse. And that impacts funding for startups across the board, including crypto gaming. Less appetite for riskier ventures.
Okay, that tracks. Economic jitters make everyone tighten their belts. But the report also hinted this funding dip might have a silver lining, something about like weaker projects getting weeded out.
Exactly that. Gergelis suggests this is partly because, quote, weaker projects are falling away.
Ah.
So the thinking is, projects without strong fundamentals, or maybe without truly innovative gameplay or sustainable tokenomics, they're finding it much harder to get funding now.
Makes sense.
And the capital that is still being invested, it's increasingly going towards projects that are, as she puts it, quietly laying the groundwork for the next generation of blockchain games.
So kind of like a thinning of the herd, focusing on quality and maybe long-term potential rather than just funding every idea out there.
Precisely. And this is backed up by a really interesting statistic from the report.
Oh, yeah. What's that?
Get this, 66%, two-thirds of all blockchain game funding in 2025 so far has gone specifically to infrastructure.
Infrastructure, not just individual game.
Exactly. Not just the flashy games themselves, but the underlying tech.
Wow. Okay, that is telling. Two-thirds going into the plumbing.
Yeah.
The foundations.
Yes. Things like making blockchains faster and cheaper to use, better tools for developers, platforms that make building these games easier. It shows a real focus on building a solid base.
That sounds much more mature, like building the highways before expecting lots of cars.
It's a very strong indicator of a maturing market, yes.
Yeah.
Investors are realizing you need that robust foundation to support real growth. It's about fixing some of the technical issues that held back earlier games.
So what does Gergula say is driving this investor shift specifically? Why infrastructure now?
She's quite clear on it. She says investors are now, and I'm quoting again, optimizing for sustainable models, player engagement, and actual retention, not just token hype.
Right, not just the initial buzz.
Exactly. They're looking past that. They want to know if players will actually stick around because the game is good, not just because of the token price. She even calls this a market reset.
A market reset. Interesting term. Like a necessary correction.
Yeah, a correction towards, more realistic goals and longer-term thinking.
Okay, so even though the headline investment number is down, the type of investment suggests maybe a healthier ecosystem is actually emerging.
That's the argument, yeah.
Now, it's not only the crypto-native startups involved anymore, is it? I think the report mentions some big names from traditional gaming are still in the mix.
Yes, absolutely. And that's another really important sign that there's still belief in blockchain's potential for gaming, despite maybe the crypto market volatility.
Who are we talking about?
Well, the report highlights Ubisoft, for example. They're continuing their partnership with Immutable.
Right. Immutable focuses heavily on NFTs for gaming assets. Ubisoft's been dipping their toes in for a while.
They have.
Yeah.
And another major example mentioned is Sega.
Sega? Really? What are they doing?
They've actually integrated NFTs and even some play-to-earn mechanics into one of their games, KAI, Battle of Three Kingdoms.
Huh. Interesting. So major players are still experimenting.
Yeah, their willingness to experiment, even cautiously, suggests they see some kind of long-term value here. It's not just a passing fad to them, it seems. They wouldn't risk integrating it into existing titles if they thought it was completely dead.
It feels like they're maybe taking a more careful approach now, learning from the first wave of crypto games, perhaps?
I think so. They've established player bases and brands to protect, so they're likely being strategic. Exploring how blockchain can enhance current games, maybe, rather than building entirely new crypto economies from scratch, like some earlier projects did.
That makes sense. Cautious but continued engagement from the big guys is definitely a positive signal.
It really is. It adds a layer of validation, you could say.
Okay, so let's try and bring this all together. What's the big picture message from this DappRadar report, especially considering that April dip? Is crypto gaming fading away, or is it something else?
I think Sarah Gergelis' conclusion sums it up perfectly.
Yeah.
She says, April 2025 wasn't a record-breaking month for blockchain gaming, and that's okay.
And that's okay.
Right. She follows up with, what we're seeing is a space recalibrating. That word, recalibrating, I think that's the absolute key here.
Recalibrating. Not collapsing, not dying, but adjusting.
Precisely.
Yeah.
She stresses that while, yes, the crazy speculative hype has cooled down significantly.
Which we saw in the numbers.
Exactly.
Right.
But the actual building, the development, that hasn't stopped. Games are still launching, ecosystems are expanding, and crucially, that infrastructure we talked about, it's maturing, it's getting stronger.
So for you, the listener, trying to make sense of all this, maybe wading through conflicting headlines, this period seems less like a failure and more like a necessary, maybe even healthy evolution.
I think that's a fair assessment based on this analysis.
The focus is moving away from those perhaps unsustainable get-rich-quick models.
Towards building actual fun games with real digital ownership that matters and keeping players engaged for the long haul.
So the noise is fading.
And the signal of genuine game development, better tech and sustainable growth that's hopefully becoming clearer.
Okay, so while those initial numbers about users and funding might have looked a bit alarming at first glance,
Yeah.
digging into the DappRadar report with Gergilis's insights paints a much more nuanced picture, maybe even encouraging. It seems like crypto gaming isn't dying after all. It's just perhaps growing up.
Exactly. Growing up, moving from that maybe slightly chaotic gold rush phase fueled by speculation to something more mature, more focused on solid foundations, engaging experiences, and actual utility for the players.
That's a really fascinating way to look at it. Definitely highlights why you need to look beyond just the headline numbers.
Always.
Okay, so for our final thought today, something for you to mull over. Consider this. How might this recalibration we're seeing in crypto gaming, how might it mirror patterns in other new tech sectors? Think about it. When the initial crazy hype around a new technology fades, what usually needs to happen for it to actually achieve sustainable long-term adoption? What shifts are necessary?
That's a great question.
And maybe think about, are there other areas in tech or investment right now that seem to be going through a similar phase, that same kind of transition from, well, noise to signal? Definitely some food for thought there.